Good morning, ladies and gentlemen. The webinar is live now. We'll just allow another 2, 3 to 5 minutes for our participants to join us and those also following us online. At the end of the day, like we all know, this webinar is being recorded, and the recorded version of the webinar will be made available in our YouTube channel. Today, we're being joined by Folajimi Adeleye. A formal introduction will be done in the course of the webinar, but he's a friend, a fellow Big Four member. So we're excited that he's joining us and VFD Group. We hope that you guys will enjoy the session today. Okay, so welcome everyone to Together We Thrive free webinar series. This is being organized by the MSME Crowd Funding Foundation, who are the owners and operators of www.fundandenterprise.org. Today is Thursday, the 12th November 2020, and today we're having our series 4 of the Together We Thrive webinar series. Some few house rules so that we're all guided. Attendees are to use the Q&A chat box or our email, which is support@fundandenterprise.org, to ask your questions, or use the raise your hand feature as available in Zoom to ask your questions, and we can then admit you directly and you can then interact with our speaker today. We will have some polls. I'll be checking with my colleagues if the polls are up, and whenever they are up, we will appreciate if attendees can participate accordingly. Our webinar is, as usual, is interactive, so we encourage everyone who have signed in to please introduce yourselves. Let us know your name, the name of your business, where you're signing up, and any other information you're happy to share with us. We're excited if you're, or we'll be happy if you're able to make any social media posts concerning this session or on any matters or anything that our speaker is able to give out today that resonates with you firmly. And when you do that, please tag the MSME Crowd Funding Foundation and our speaker, Folajimi Adeleye. And please, when you do that, also use the hashtag Together We Thrive. Let's make it trend. We're available on LinkedIn, Twitter, Instagram, Facebook, and on YouTube Live. So I said earlier, this is series 4 of the Together We Thrive webinar series, and the topic today is managing your business finances. We're being joined by the Group Financial Controller of VFD Group PLC, Folajimi Adeleye. I would like to just take a brief moment just to introduce him formally, and then we can then pick up the session. So Folajimi is presently is also the Executive Director and CFO of VFD Tech Limited. He has over 6 years Big Four experience. Luckily, he and I come from the same Big Four firm. He's got extensive experience in financial reporting and management. His core competency include audit, internal controls, compliance, credit management, credit analysis, budgetary analysis, tax management, and regulatory compliance reporting. So today, we want to encourage each and every one of us to pay attention, scribble down your notes, because you're being, the speaker today has got the necessary skills. He's got the expertise, he's been there, he's doing it, and he can share his history. At that point, I would like to yield the floor to Folajimi. Folajimi, can you hear me now?
Yes, thank you, Magnum. Good morning, ladies and gentlemen. Thank you very much for having me at your session.
So go ahead while I strive to share your slide.
Yeah, so like Magnus mentioned, I currently work with VFD Group as financial controller, but also I work for the tech subsidiary here. VFD Group is that type of business that would quickly resonate with you as a small business owner, because the working environment you have in VFD Group is that one that sets you up with an entrepreneurial mindset. You find that a significant chunk of members of the team in VFD have an entrepreneurial mindset, and that's because VFD has a culture where every member of the team, irrespective of their core functions, are required to push the business. So everybody drives the business. A few years ago, we used to have that phrase that you either sell or you die. VFD Group is a proprietary investment company. VFD Group has a number of subsidiaries, but also has quite a significant investment in several sectors of the economy. When I joined VFD Group was focused on the financial services industry, but the strategy has changed to move beyond that industry, and that's what you see currently displayed. VFD Group is a parent company for VFD Microfinance Bank. VFD Microfinance Bank is a bank that has grown from its limited location, but has now used innovation to expand its reach. VFD Microfinance Bank is licensed as a unit microfinance bank. However, on the platform of technology today, VFD Microfinance Bank is driving its business on a global scale. VFD Group Microfinance Bank runs a banking application that is called VBank. For those of you that are familiar on the social media, you probably see trends with the VBank or V, which runs on the VFD Microfinance Bank platform. That platform alone has some over 200,000 users, and that's just from one location. So that bank has moved from a brick and mortar microfinance bank to a bank that is able to run on the platform of technology. We also have Everton Bureau de Change. Everton Bureau de Change is probably one of the more popular BDCs you have around the country today. And also, all of these businesses, for emphasis, are businesses that were developed from the scratch. Some of them are just some 6-7 years, a few are about 2 to 3 years old since commencement of operations. And we've witnessed amazing growth across these businesses based on corporate culture and our approach to growing business. That's probably more obvious around our asset management business as well. We've seen some aggressive growth over the years. I'm hoping that being someone who's worked in that environment, who's also seen a few things that have happened within our business, I can, in this session, communicate in a very simple manner, but at the same time, share with you a few things that will help as you run or look at your small business. Financial management for businesses, especially small businesses, is so critical that sometimes in practice you find it quite shocking that business owners take it for granted. We did a bit of search, and we found that 36% of business failures were largely caused by inadequate financial management, which is quite interesting because, as a matter of fact, when I left KPMG, where I was working, to join a startup business, I found it quite interesting that at the point of recruitment, the CEO of that company said to me that we are coming to set up our finance function. And I said, oh, but when I searched or did a bit of research about this business, the business had been in operation for 2 years. He said, yes. So I said, oh, so how have you been running your business? And it was a bit blank, which I found quite interesting. Coming into that business, working in that environment was quite a tricky one for me. But also what we quickly saw in that business was that because of that, by the time we were doing proper audits of numbers, we had quite a lot of incomplete records we were dealing with. and that had to also result in some very significant write-offs. That business survived because, for the owners of that business at that point, they had enough funding to sustain the business or to take that hit. However, this business, which, the business it was a great business in terms of returns that it was making in the market. This was at a time when there were a number of non-traditional lenders in the financial services space, and people were earning as much as 120% as interest on lending, unsecured lending. So it was really a period for that business where it should have actually enjoyed financial boom. But because there was no proper reporting, and financial management, it actually took a significant hit and had to spend the next few years sorting out the numbers, improving on reporting, and was fortunate to also subsequently obtain foreign external funding. However, that's not the story of every small business. And that's why for you as a business person, you cannot take the risk of going through that route. You need to pay attention to how you utilize your funds, how you procure these funds, how you assess your risk. You need to pay attention to even your accounting application. Something as simple as, we set up something, we got an accounting application, we found some guy who has some minimum level of accounting education and we made him our accountant. Sometimes something as simple and basic as that would expose the business significantly. Depending on your type of business, depending on the type of funding you also need, it might be dangerous for you to hire someone who's basically doing bookkeeping as opposed to also evaluating your exposure as a business. I know a small business that saw the opportunity to give out loans at very high rates, and because they had conversation with a processor who said they could help them deduct repayment at source. This business dived into that without sufficient risk assessment. They were already in the business before they realized that their service provider did not have a very efficient process. What has happened as a result of that is that at the first instance, they were already experiencing some 40% in loan losses. While the service provider was not necessarily dishonest, because I spoke to the person a few days ago, and they are still getting back some of those repayments. The inefficiency of that process and that arrangement meant that they were paying a lot of price for the time value of money, the liquidity restraints that they have as they deal with those things. So what I would always say to people is that instead of saying, I want to hire an accountant that I would not pay a lot of money because that's my strategy in quotes for being efficient or saving money. If your business is not at the size where it needs a full-time employee, it is better to get someone that has a better level of experience that will provide some kind of part-time work for you. So you must be very clear to you. You must be able to have an understanding of your inflows and your outflows. And every time you spend money, you should have a line of sight as to where that money is going to come back. Okay, so just a few tips also that I would like to share with you that I think you will find very, very important. The number one thing is that it's very important for you to invest in growth. You must, as a business, during that period where you are making some minimal returns or looks like the business is rosy, set aside some funding that you can use to take advantage of opportunities that may not even necessarily be within your space, but you must be savvy enough to know that there will always be opportunities in the market. We just had the US elections. It looks like a candidate from another party is going to become the president. What impact do you think the policy change or direction in policy for the American economy will have globally on various economies? Which sector do you potentially think it could affect? So if you have not put money aside, you may not be able to take advantage of those opportunities. If you're someone who's also been following the stock market in Nigeria, you will observe that for a period now, there's been a lot of profitability in that sector. If you're running a business where you've kept aside some funding at the time when you're making resources, when you're making a lot of revenue, then you'll probably be in a position to take a little bit of position here and there without exposing your business to significant financial risk. Also, and I think this, I assume that for some of us small business owners, we've always had someone say this to us: you need, as a business owner, to pay yourself. It is better to pay yourself than to get carried away and assume that you are the business owner and then you just want to use the liquidity of the business to meet your own financial needs. It's very easy for business people to get carried away with this, but I would say to you that your business will grow, and it will get to that point where the business can potentially foot all your bills. But as you are still trying to grow your business, you need to be very clear. So far at this level of revenue, be objective and say, based on this level of revenue, based on my level of cost, based on my targeted plans of funds that I want to put back into my business, I would like to then say this is the practical amount I can pay myself. If you have a finance person who is looking at your numbers, you would also be in a position to reevaluate how much you pay yourself. And I would also emphasize to business people that at that point in your business is the point where, if possible, you want to know how you're doing on a daily basis. If it's not practical, you want to know how you're doing on a weekly basis. You don't want to wait until the end of the month to find out how well you're doing. Another thing is that you need to look for strategies to, one, as much as possible, collect on receivables from your customers. If you have to look for ways to give them incentives for them to pay you in a timely manner, whatever it is, such that your cash flow is as fluid as possible, it's something you should aggressively consider. So I would say, a few months ago, maybe some 18 months ago or so, treasury bills were in excess of 10% in terms of returns. Today, treasury bills are below 0.5% in terms of returns. So if someone was going to pay you about 18 months ago, I think that it would have been better if you gave that person a 3 or a 4% discount and got your money up front, than you didn't give them a discount and they paid you 18 months later, because you've suffered one significant loss, erosion to the value of your money, but also more importantly, you've missed the opportunity to plow it back into your business for turnover. You need to be open-minded around that. I think I've mentioned is that you need to monitor your numbers. And in monitoring your numbers, look for very simple applications and embrace applications that encourages remote work and gives everyone the flexibility to keep the business running. You must have processes in place. Your organization must not be one where people make payments just because you said so. And I know that, for us sometimes as business owners, the title of chief executive or whatever we choose to, nomenclature we choose to go by can quickly distract us from the fact that it takes a number of years for business to grow to where it is right. It's important to also anticipate the dynamics of your business. It's important to be able to anticipate that there will be a number of changes globally in the business environment, in the cultural environment as you run your business. I mean, I know that there's almost practically nobody that anticipated issues around COVID or issues around even the NSAS protest in Nigeria. But the businesses that found it easier to navigate were those businesses that have been able to work one remotely, to be able to provide services at all times, irrespective of geographical barriers. Those businesses, have been able to take advantage of this period to run their businesses. Also, those businesses that have been able to find multiple means of earning revenue have found ways to develop themselves. But important thing is that for you to be able to take advantage of opportunities, you must have first of all structured yourself in a way that you are ready to plug that. That's one of those things that has happened to a company like Zoom, because already the infrastructure was there. In my organization, we've been able to run the business as it is without doing a lot of physical work. I'm not sure that since March I've been physically present in any of our buildings up to 10 times, but that has not shut down the business. Even though, like every other business, we've also felt the impact of the economic impact of COVID and the rest. Also, for you small businesses, cash is king. It's critical that you chase funding for your business. And I think one of the things I've also seen sometimes with small business owners is the lack of willingness to collaborate or to allow other other investors come into the business. This is what I would say to you. You probably have heard it several times. Is that 20% of 100 is better than 100% of 20. Because for you, 100% of 0. Because for you, you may want to have control because, and I understand, you own the vision. It is your vision. You are committed. You have a strategy. You know what you've envisaged for your business. But I don't think it does any harm to have third parties, especially the third parties that don't only throw money at you, but ensure that you sweat that money by asking you questions, by pushing you to think in different ways that you've not thought about growing your business. Very important for you as a business owner also to understand your cash flow patterns. Some businesses are cyclical, and that's what it is. If you are a business that is practically shut down in December, it means that between January to November or whatever periods are your peak periods as a business, you need to plan the liquidity in such a way that you can account for or you can fund expenses that will come at the end of the year, whether it's paying your employees, whether it's running your day-to-day business. So your understanding of that pattern should also help you in ensuring that you don't get carried away too quickly at those periods when you have experienced boom. You need to be creative with your cash flows. You need to find ways as much as possible to be able to quickly collect from people that are owing you, while you also find creative ways to delay as much as possible in paying people that you need to settle. I mean, whether it's to come up and say, depending on who your vendor is to look for a structure where as much as possible, if it's available, to optimize credit or delayed payments as you have it. Everything matters in terms of cash flow. As a small business, the fact that you have the liquidity, the cash to make full payment for an item is not enough reason to make immediate payments. You need to ask yourself quickly, I need to pay 100,000 for these goods. I can turn around that 100,000 and make a return of, 30%, 40%. And there's someone who can give me a 50,000 or a 60,000 loan at 18%. Then maybe you want to do your numbers and do your calculations and ask yourself, should I be parting away with my entire liquidity at this point because I just can't afford to pay for it? Or should I be holding on to some of my liquidity so that I can take advantage of opportunities that come? My experience in the financial services space is that sometimes opportunities, and that's why it's very easy to align with the mindset that people who are rich and liquid just tend to continue to grow richer. It's because oftentimes opportunities to make very interesting or very good returns, which I would call arbitrage, outside your regular circle of business, they come very quickly, and those opportunities might not wait for you forever. That's why you must be able to either have your immediate liquidity, or you've been able to set up structures where you can get quick access to liquidity to take advantage of opportunities. It might be through the traditional means, and it might be through the non-traditional means. And I think they're not exhaustive. One of the things that we did at VFD Group at the initial stage, before the business began to grow and get some higher level of credibility, was that in pushing all our people to say all members of staff need to drive business or have business targets, is that by working with us for a few weeks or a number of months, employees have been able to become a bit comfortable to know that, okay, if I say to my relative, come and invest in a product that my organization is selling, I'm a bit comfortable that my relative's money is not going to disappear or go down the drain. So because of that, at the initial stage, a lot of liquidity that we used to drive the business was because employees all aligned, plugged into the vision, were using their personal relationships to drive and grow the business. And in the process, all of them, or most of them, developed an entrepreneurial mindset. We find that a higher percentage of employees who leave our group typically leave to set up their own businesses based on those experiences they've had. Today, we've used that approach, we've pushed our numbers, we still continue to use it. But what we've also found out is that, even the traditional institutions are now quite more open to do business with us. And you'll be surprised at how flexible some of those institutions become just as a result of the fact that they have that desire. Also, I think one trap that small business owners fall into is that over time, business owners also begin to assume the role of everything. So you are the cashier, you are the accountant, you are the CEO, you are the head of sales, you are practically everything. It's useful and good for you to get help when you need, to be able to delegate to people you trust. I mean, yes, I understand. Sometimes your business might not be at that level where you are even ready or able to hire new analysts, but do you have people that you can sound off some of your ideas with? Are there people who can assist you with some of those tasks that would normally distract you but not add significantly to the value of your business? One area I would say a typical Nigerian or potentially African has been able to do that well is in the area of when families give birth to children, they're able to quickly have an extended member of the family come in to support, such that the wife is able to do, go back and do some of the other things that she previously could not do or she could not focus on. And it's also more helpful in those areas because I think typically you will probably be more comfortable with a family member than say, we are hiring a total stranger to look after some of these things that will distract you from doing the key things you want to do. Important conversation also is around flexibility. As a small business, you need to be flexible. You need to make all the necessary adjustments. If, as you monitor your business, after you are taking the decision to pay yourself, you realize that your business is not doing well enough for you to be paid at that level you are being paid, and you should be able to make those adjustments very quickly. You should be able to be open to opportunities to grow, like I reiterated earlier on. Even if it means that you will then invite other people to help you grow your business significantly. And I've seen a lot of that with some of the, I didn't list all of the businesses we relate with in VFD Group, but I've seen that a lot with some of the portfolio businesses we've engaged in, and we've entered into a transaction with a business that was about to go down, put in a stake. It looked like we were taking control of the business, even though we didn't have controlling shares. But at some point, the owners of the business were able to buy us out, which meant good returns for us, and for them was that their business was back in the green. So you must be open to all the kind of support you must get. You don't have to cling to owning 100% of your business. And as much as possible for you must have a system where you hibernate, take a step back, and you're able to push again. If you get to a point where you are burnt out, I suspect that if you don't take time, you would start making series of wrong decisions that could potentially harm your business. So I think those are largely my thoughts around financing your business or managing your business. There's a lot to continue to talk about, but my aim with this slide was to simplify it as much as possible, and also engage you as well. So at this point, I'm open to get comments, contributions, questions, what have you on the subject matter. Thank you very much for listening.
Thank you so much. Thank you so much, Folajimi. That was quite insightful. Just to help summarize what we've discussed so far. Basically, small businesses are in dire need. Research has it that about 36% of small business failures are caused by inadequate financial management, which then means that about 8 to 40% of such businesses go out of business in each year. Some of the tips Folajimi has shared with us today is we need to invest in growth, So as a small business, we need to be able to set aside our small buckets of monies when we do get them, so that we can invest them, not necessarily in the business, but we can also invest them so that they are income yielding revenue for the business rather than put them away in the bank. He's also alluded to the fact that as a small business owner, you need to pay yourself. You need to pay yourself so that your effort or your activity or your sweat can be duly accounted for. And all things being equal, sometime in the near future, your business will be able to take care of all of your needs. He's also attributed that as a small business, you need to be able to manage your receivables. So like I was speaking to a potential client some couple of weeks ago, and I did say to him, because he's in the business of automobiles, so he buys vehicles, he sells sometimes those vehicles, he also dismantles them. So we're catching up on the need for him to have a financial a software to assist him manage his cash flow. And one of the things he said is that there is a huge chance that there are people who are owing him monies out there that he can no longer remember. And for all intents and purposes, that is lost money. You can't even call it bad debt, because bad debts are things that you know that somebody is owing you, but for one reason or the other, that individual cannot pay you. But in this particular example or this case, this is lost money as it were. So as a small business, we need to be able to manage our receivables, manage our cash flow. When we send out invoices, if people are owing us, we need to be able to track it. We need to be on top of them at all times. So we need to set up good financial control, set up proper internal control measures. There has to be a process, a way that things are done. One of such things is if you're running a business, your business activity has to be tracked. So if somebody is paying you for work that you're doing, that payment should go into your business account and not your personal account. Those are some of the internal controls that you need to put in place. And the list go on and on. And we encourage you, if you have any further questions, you can begin to post them on the chat box. He's also mentioned that we need to monitor our books. We need to be able to prepare financial statements, and simple and free accounting software are all over the whole place that can assist us in this regard. We need to be able to plan ahead. And he did mention that we should anticipate what is going to happen in the future. And I know he talked about the story of the likely change in the presidential race in the US. And as a business owner, we need to be able to estimate or forecast or project what those changes would mean if a new regime comes in now. And if the new regime doesn't come in and the old regime is taking over, what does it mean for our business? So we need to be able to project and plan for all of this. And lastly, he did say that cash is king. And as a small business, we also need to be very, very, very careful not to burn out. Thank you, Folajimi, for sharing all of those insights. And we're excited that you joined us. One of the things, there are a couple of questions that I have here. Someone has asked, are you able to assist them, via the VFD MFP to get funding options? And I think I can pick up that question myself. So if you need funding and you want to approach VFD Microfinance Bank, I think you should send us an email or talk to us, and we can then put you in touch with VFD. I don't know, Folajimi, if you have any other thing you want to add.
Absolutely. I mean, VFD Microfinance Bank is in the business of lending, so we're open to those conversations, because there's usually a bit of evaluation that is required, and the fact your ability to keep proper records would help you significantly in assessing funding.
So I would like to run a poll. I would like to run a poll before I take the other 3 questions that are there, because I'm also mindful that I would like to keep this webinar very short. So I'm launching one poll now with multiple questions, and it's actually a yes or no. Let me see the answers that I get. The first question is, do you have an accounting software? The second question, and it's pretty much yes or no, do you have a financial statement? And the third one would be, would you like to have a one-on-one session on finance-related matters for your business? So let's see our audience. If you guys can quickly respond to this thing. I just have 30 seconds more. Okay, so across board, I've got 50% saying yes, they have an accounting software, 50% saying no. So if you don't have an accounting software and you need help with getting accounting software, we ask you to send us an email or contact the foundation. We'll share the numbers and the email address shortly. Financial statement, we also have 50 people saying yes, they've got an accounting software. 50% also saying no, they don't have an accounting software. And then we've got about 65% saying yes, they would like to have a one-on-one session. So we're going to be putting up the email address of the website. So just 1 second, the email address of the foundation rather. Then we want to encourage everyone to please, as much as possible, reach out to the foundation. There you go, you see it shortly. Yeah, so reach out to the foundation. That's our website name, email address, and phone number. And like we said earlier, we are available on LinkedIn, Twitter, Instagram, Facebook, and YouTube Live. So Folajimi, back to the question. Someone asked, when it comes to incomplete records, what can you do as a small business to mitigate this?
Okay, so I mean, it's a number of things. Are you saying that you already have that situation where your records are incomplete? If you have a situation where your records are incomplete, my recommendation would be to get a professional to review your numbers. It would be a bit easier to reconcile if you've passed most or all of your transactions through the bank. If there's some kind of trail for your numbers, it's easier to reconcile and resolve, especially someone who has experience with reconciliation. If there are a number of those transactions where there's not sufficient paper trail, you would ultimately have to make some level of judgment call on how to deal with the impact of those potential losses. I think that's what I would say. But you would usually, I mean, my best recommendation is to get a professional. But more importantly is that you know that you have an issue right now with incomplete records. Then what action are you taking going forward to ensure that you've kept proper records? So you need competent hands to also ensure that you can say from this point going forward, I had proper documentation for all my transactions. Okay,
so another question, last but one question. He said, from your experience, which critical areas in Nigeria do you think a small business can successfully invest some liquidity into?
That's quite tricky. I'm not sure there's a one-size-fits-all answer to that. What I would say is that it would typically be a combination of your risk appetite and how knowledgeable you are. What I can tell you very easily is that I would not recommend that you invest in instruments that you do not understand. If you do not understand an instrument, I would say to you, move away from it. If you are the conservative type, you do not have an aggressive risk appetite, I would then say, depending on your level of liquidity, to either invest in the money markets or invest in fixed income type of transactions. Money market is maybe generic. It might just be your regular mutual funds. Yeah, you want to either invest in organizations that have a long history of stability. What happens though with those bigger organizations is that because there is a higher level, your risk level is lower. Potentially your returns will typically also be lower. So oftentimes what you find is that the higher the risks, the higher the potential returns. So I think the key is, one, strike a balance. Two, you are investing in an instrument. You need to have a clear line of sight how your investment will return to you.
Okay. The last question I have here is, what can a small business do to manage receivables?
So I think readily I would say that one is as at the early stages of your business, as much as possible, you want to avoid even doing credit sales in the first place. Where you have instances that you don't have a choice but to do a bit of credit sales, you might want to create incentives that makes people get some level of discount or get extra additional services for making quick payments. You might also want to begin to build relationships to look for ways that you find some customers who are even happy to pay you upfront, and use a mix of that to balance your receivable situation. But also, when you are then doing credit sales, you need to ensure that you have done proper diligence on don't be so obsessed in making a sale that you don't do due diligence on the third party that you're making credit sales to. If it's possible, you should have some kind of backup to say, if this person doesn't pay me, this is how I can recover my debts.
Okay, thank you so much, Folajimi. And at this point, we gradually begin to wind down the webinar for today. Quite short and simple, straight to the point. We will be sharing the link to the recorded version of the webinar on our YouTube page. So we want to encourage all our members to pick it up. We've shared the email address and phone number of the foundation. If you do want to have a one-on-one with us, please contact us. But before we draw the curtains from today's session, I would like to also play the video of Fund and Enterprise.
Why is entrepreneurship so challenging in Nigeria? Because entrepreneurs lack support. They lack funding, training, mentorship, network, market, technology, and other necessary support systems. Haruna's kinsmen supported him with portions of land and some money. He is a successful farmer today, making a good living for his family and employees. Chima was set up in business by his uncle after some years of apprenticeship. Bola too has a similar story with her real estate business. You too can support businesses today on fundandenterprise.org. Fundandenterprise.org is Nigeria's first crowdfunding platform for supporting MSMEs with funds to start up or scale up their businesses, training, mentorship, network, market, and technology. You should support businesses today by donating to them on fundandenterprise.org. You can also create your fundraising campaign on fundandenterprise.org if you need funds for your business. Help your business and other businesses achieve their goals today on www.fundandenterprise.org. This way, our people can have a meaningful livelihood and our economy can thrive again.